Welcome at WERA Capital Partners. In this video today, I want to talk how to set up your business properly, especially if you are a solopreneur, a business owner, or a digital service provider. So when you already have started your business, you're normally good and have expertise in the service or the product you give to other third parties. And they pay you because the service you bring to other parties, right? This is the foundation of your business. So you started your business, you started making money, and now you are maybe early six figures, means 100, 200, 300,000. Let's name the currency: euro, pound sterling, US dollar. And now, very important, you need to develop a special kind of mindset, because if you would like to become successful in the long run, and if you would like to build something solid where you can rely on and where you can build a future on, especially for your family, then you need to structure your business in a proper way. And there are always three basic pillars which needs your attention. And the first pillar I would like to talk about is cash flow. Cash flow is the lifeblood of your business. Without cash flow, you have no business, you have a hobby, and this is what you need to understand. But what is also very important, the money you make in your business, and especially if you run your business with a limited company, it's the company's money, it's not your money. That means you have to separate your private finances from your business finances. This is the most important step, and this is a huge piece of learning or advice or mindset what you have to understand. The money you make in your business is your company's money, not your private money. And 99% of all business owners who generate revenue up to, let's say, £250,000, 250,000 pounds, euro, you name the currency, make that mistake that they handle their business finances without a proper structure, without a plan, without building reserves within the business. Because if you don't learn how to handle your cash flow properly, sooner or later your business will be finished. And what you also need to understand, you only can scale your business if you are able to separate private finances from business finances. This is very, 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 very important to understand and to learn that, because you have taxes, because you have investments, you may have employees. You may would like to save money to enables you to purchase out of your taxed money valuable assets which create another income stream. So keep that in your mind. First point is you have to organize your cash flow, and you have to organize it in the proper way that third parties cannot take it away from you. So this is pillar number one. Pillar number two is your taxes. Normally, as a business owner, taxes are your biggest expense. And what you have to do is you have to create a business structure and a ownership structure which allows you to pay the absolute bare minimum of taxes possible. Because only when you do that, then you can grow with your money, with your cash flow into a future. Because let's give you an example. Average tax rate in the United Kingdom right now for corporations is 25%. For example, if you can lower these 25%, maybe about 10%, and you have, for example, 100,000 pounds sterling taxable income, that means you save 10% of that is 10,000 pounds sterling. This is money for free. Only if you know what you do, and only if you have created a tax efficient structure for your business. So taxes are your biggest expense, and you need to build a proper tax structure for your company, for your business, which enables you to pay once tax. This is important. I don't suggest you not to pay taxes. Pay your taxes once, show that you have paid your taxes, and the government will tell you you are a good boy. This is all you have to do. And then be smart, act within the law, set up a structure which enables you to optimize your taxes and your cash flow, and you will be the most happiest business owner ever. And the third most important pillar, in our opinion at WERA Capital Partners, is You need to develop a growth strategy. What do I mean by that? It's very simple. First of all, you secure your cash flow, you make solid money. Second thing is you optimize your tax structure and you pay taxes once. And what is it what you want to do with the profits out of your business? What do you want to do? Normally, what you should do is pay your taxes, pay your structure dividends, and use this taxed money to purchase hard assets like property. This is what the rich do. So you have to build and think what do I want with the money? What do I want to do with the money I make in my business? What is the purpose of it? And you should think about it. Where would I like to invest it? This is pillar number 3, a growth strategy. And if you never heard about that, these 3 logical foundations for every business owner, which is 6 figures plus up to 7 figures, then simply click the link in our bio, book a private consultation. I'm happy to talk 15 minutes on the phone to you and find out together with you what is it what you need the most, what kind of topics you need to look after your business, and how you can set up the most efficient business structure that you can have fun and become wealthy with your business. I appreciate your time. Have a nice day, and I'm looking to talk to you very, very soon. Bye-bye.